And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Today we'll be talking commodities and Nigeria's first quarter GDP data for 2022 and a lot more. First of all, let's take a look at what's happening in the market and some business news. We see oil prices eased early today as concerns over possible recession and a weaker consumption outweighed an expectation of tight global supply and a pickup in fuel demand in China after Beijing's promises of stimulus. Brent crude futures for July slid 35 cents to $113.07 a barrel, while the U.S. West Texas Intermediate crude futures for July delivery dropped 36 cents to $109.93 a barrel. Both benchmarks declined by more than $1 early in the session. Brent gained 0.7% on Monday, while WTI settled nearly flat. Multiple threats to the global economy topped the worries of the world's well-heeled at the annual Davos Economic Summit, with some flagging the risk of a worldwide recession. And the fear that Africa may face food crisis may have been doused as the African Development Bank president, Dr. Akinwumi Adesina, told a gathering in Accra, Ghana, not to express worries as Africa will not have food crisis anytime soon. Speaking at AFDB's annual meeting, Dr. Adesina says he reassures that despite the mounting challenges facing the continent, citizens will not beg for food. He also asked the Nigerian government to reintroduce the e-wallet system, which was first used when he was the country's Minister of Agriculture, to help farmers. Our correspondent, Teniola Shoboale, reports.
The African Development Bank hosts members of the media at the Kempinski Hotel, Accra, for a breakfast meeting as the AFDB holds its annual meetings physically for the first time in 2 years. From the COVID-19 pandemic to climate change, Africa has been hit by multiple challenges, now compounded by the Russian invasion of Ukraine, threatening the beginning of another food production crisis. However, the African Development Bank's president, Dr. Akinwumi Adesina, is confident that the AFDB will avert a food crisis on the continent through its $1.5 billion African Emergency Food Production Plan.
We were not ready when we had COVID-19. We didn't have the technology. We didn't have the vaccines. We didn't have anything. But for agriculture, for food, we are fully ready. Africa will not have a food crisis. Africa should not and will not be begging for food. Africa will produce its own food.
Listing the support of the AFDB to Nigeria, Dr. Akinwumi describes the country as a priority.
We are supporting Nigeria with about, I think it's about $54 million to reallocated fund, $30 million reallocated fund that it will use to support an emergency food plan to produce food in the dry season in Nigeria. And Nigeria will also benefit significantly from the African Emergency Food Production Plan. As I've always said, Nigeria needs to go back and use the electronic wallet system, which I developed when I was minister, to get seeds and fertilizers straight to farmers and cut out all the middlemen. And we are going to help the government. So Nigeria is priority for us.
As the AFDB's annual meetings commences under the theme Achieving Climate Resilience and a Just Energy Transition, discussions over the next few days will focus on ensuring that Africa has stable energy systems and exploring how to raise more climate financing for the continent ahead of COP27 in Egypt later this year. From Accra, Ghana, Teniola Shoboale for Channels Television News.
And we'll be getting more from Teniola as the day progresses. right there in Accra, Ghana. Well, to our first conversation now, yesterday, Nigerian National Bureau of Statistics published Nigeria's Q1 2022 GDP numbers, which shows that the economy grew for the sixth consecutive quarter by 3.1% year-on-year compared to 0.5% year-on-year in the corresponding period of 2021. Despite the myriad of challenges in both the domestic and external economic environment. Well, to make sense of this number, we have Damilare Ashimiyu, Senior Analyst with AfriInvest Research and Consulting, joining us from Ikoyi. Great to have you on the program. Good morning.
Good morning, Larry. Thanks for having me.
Right. So quite impressive numbers in light of the multiple headwinds in both the domestic and external environment. How would you rate the GDP performance in the first quarter of 2022?
Well, in as much as Nigeria recorded a growth in Q1, I would say the GDP performance, the year-on-year number of 3.1% growth, is a bit magnified. And looking at where we're coming from, in Q1 2021, Nigerian economy only grew by a muted 0.5%. So that was a low base, and provided enough basis for a modest improvement in economic activities to make growth look a bit magnified. But if you look at the GDP in terms of in monetary term, the real GDP for Q1 2022 is 17.6 trillion. Compare that to Q1 2021 at 17 trillion, roughly. So it means the level of economic expansion in Q1 this year is just barely about 600 billion above what we had in Q1 2021 when the economy was just coming out of the recession. So what that means, if you analyze that in the context of the population, as of Q1 last year, the UN estimated Nigeria's population to be about 211 million. And given the fact that the Nigerian population grew on average by 2.5 million annually. So it means GDP per capita last year in Q1, when the economy grew by 0.5, is just about 80,500 per head. So with this current growth, GDP at 17.6 trillion real term, and population has been assumed to grow by 2.5%, so that will give us about 260 million. It means GDP per capita is just increased barely to 81,300. So if you use the current official exchange rate of 410, GDP per capita now is just 196 naira, relative to 198 naira, relative to 196 last year. So that's just $2 improvement, which is really not significant. And also, if you look at the GDP numbers for Q1, if you compare it with the performance in Q4 2021, the economy actually contracted by a whopping 15%, because in Q4 2021, real GDP was 20.7 trillion. And so if we're now having 17.6 trillion, it means over 2.4 trillion have been shaved off of the economy. Yeah, there could be a lot of arguments around the fact that Q4 is always known for a lot of end of the year activities which normally push up economic growth. But the truth remains that the level of moderation in GDP from 20.7 trillion to 17.6 is material. And if we continue at this pace in Q2, when there will be no low base, because last year Q2 the economy grew about 6.1%. So it means if in Q2 between April and June this year, growth is not much stronger than what we had in Q1, we're likely to see another muted growth, or possibly a potential contraction in economic activities.
Quite interesting. Well, let's look at the sector performance. Now, the non-oil sector has been the main driver, of the economy since exiting recession in the fourth quarter of 2020. Can we then say the federal government has achieved its goal of fully diversifying the economy away from oil?
So when you talk of diversification, there are two major things you look at. What is the constituents of your export earnings, and what is the level of interrelatedness of the sectors in your economy? In terms of export earnings constituent, as of full year 2021, given MBS data, crude oil export alone accounts for 74% of Nigerian export earnings. followed closely by natural gas export of 9%. So if you add that together, it means crude oil and gas accounts for about 83% of Nigeria export earnings. That shows already that the economy is not diversified. We are very open to external shock that may arise from oil price moving against us. Unfortunately, even though oil price is high now, our production level is a bit dismal. In Q1, our average production was 1.49 million barrels per day, whereas the budgeted amount is 1.88 million barrels per day. Even our quota is 1.77 million barrels per day from Quebec. So it means we are underproducing, and so we are not maximizing the high oil earnings. So what I'm saying in a nutshell is that the fact that the oil sector, non-oil sector is the major driver of the economy. The recent growth does not mean that we are fully diversified, because our export constituency shows that we are fully dependent on oil largely. And also, when you talk of intersectoral relatedness, in a diversified economy, a lot of businesses should not depend on importation to run their operations. But if you randomly pick companies across different sectors in Nigeria, their financials that we have analyzed over and over have shown that, on average, we have most Nigerian companies relying on importation to up to extent of 50% of their production level. So in that level, the economy cannot be said to have been diversified. But notwithstanding, it doesn't take away anything from the federal government, especially through the CBN. Their diversification efforts. We've seen a lot of programs, being launched to help drive this. We have the 100 for 100 policy to support companies that will help boost non-oil export. We also recently saw the CBN launching the RTX 200 policy, all in the name of trying to support businesses to boost non-oil export. But currently, we are still very far from diversification compared to countries like South Africa, where export earnings are well balanced. The three largest export earnings for South Africa, we have mineral at about 25% constituent of total export. We have precious metal at about 11% of total, 60% of total export, and vehicle manufacturing and airplane parts account for about 11%. So we have a balanced economy. So if there is a shock on precious metal, the economy will not really feel the effect like Nigeria will feel if there is a shock on oil. So by and large, our diversification journey is still very far, but I think we can get there.
Yeah, we can actually get there. Well, looking at the constituent sectors of the non-oil GDP, the agric and services sectors recorded impressive growth, relative to the first quarter of 2021, while the industries sector contracted 6.8%. Year-on-year. What, in your view, drove the impressive performance of the agric and services sector, and what's responsible for the contraction in industry sector?
Yeah, so for the agric sector, we must commend the effort of the CBN. The CBN has, been doing a lot for the agric sector.
So much interventions there.
Yeah, we have a lot of programs. We've been having Anchor programs since 2017. The CBN has added more. The RC 200 initiative I talked about earlier, as well as the 100 for 100 policy, are also open to players in the agri space. As a matter of fact, the first sort of beneficiary from the 100 for 100 policy early this year, about 29 billion was disbursed by the CBN. We have 13 of them being players in the agri space. So the growth in the agri sector is actually not really surprising, because a lot of effort have been put into that, a lot of initiatives, a lot of stimulating projects from both the federal government and the CBN. And also, between last year and now, the planting season was relatively stable and was slightly favored by the weather condition. Coming out of the pandemic in 2020, initially at the beginning stage of 2021, there were a lot of cases of farmer header crisis. We've seen that reduced in recent time. Hardly would you hear about that. So all these kind of stability as well as supportive measures were the main driver of the agri space, plus the fact that food prices, between last year and now are more than double in most cases. So, GDP is a measure of monetary value of goods and services. So if I am producing one commodity and it's cost 10 Naira now, and last year, and now it's costing 20 Naira. So, my revenue will actually be magnified as well, or not to take away anything from the the effort of the CBN. And for the services sector, it's quite interesting that the services sector continue to support growth largely. This cannot be whisked away from the massive investment, by mostly telco giants. We've seen two of Nigeria telcos giants being granted payment service bank license. A lot of investment went into that to make that happen. And even late last year, two of Nigeria internet providers were also granted a license to drive 5G facilities. And we've also seen a lot of fintechs, investing. So, these are the reasons for the improvement we're seeing in the services sector, which is led by both the ICT and financial and insurance, because the financial and insurance sector grew the most in Q1 by a whopping 23%. So the continued investment by private players, and that shows what private player can do if given the enable environment in finance and insurance as well as ICT, is the joker behind the growth in the services sector. And for the industry sector, the major drag on the industry sector is just the crude petroleum and gas sub-activity sector, which invariably account for more than 40% of that sector. So given the fact that Nigeria investment in oil in Nigeria has reduced, as can be reflected in our oil rig count, which has dropped from 16 in 2019 to just 8, and also our production level is dismal, even at a time that oil is high. So the crude petroleum and natural gas subsector under the industry sector contracted by 26%. So that was strong enough to drag the services sector lower, because the subsector was like the largest component in that segment. But if you disaggregate the industry sector further, you see that manufacturing also grew by 5%, which is decent, though despite all the exchange rate crisis.
Right, and there have been some key policy developments over the past year, that the market have been watching to measure their impact on, specific sectors. For instance, the NINSIM linkage exercise, introduction of some new taxes. How have these policies, affected, the relevant sectors so far?
Well, let me speak to the NIN policy first. The only good thing is that players in that space have developed a very thick skin for different challenges. But the truth needs to be said, as we rightly flagged in our recently released telecommunication sector report titled "A Bright Spot Amid Murray Waters." Telecom subscriber base declined by 4.4%, which is about 9.1 million, just due to this NIN SIM linkage. And it also affects the revenue of industry players. But the good thing that worked for them, that made all the listed telecom industry players to post double-digit revenue and profitability taxes, that they were able to improve their cost management, and also their revenue from data jumped up significantly. So that was able to cover up for the loss of subscriber base. And the same thing for the sugar tax in the brewery industry. Industry players had to dig deep to be able to cut down their cost. But these policies affected cost line of this player, but due to their ingenuity as well as their resilience, we're able to still deliver stronger numbers. And that's why we see ICT growing double digit again, going back to the era what we used to see before 2021 at 12%.
Quite interesting. Thank you for breaking down those numbers, Damilare. But before I let you go, it's the first quarter. We still have the whole of 2022 to go. What's your outlook for 2022, given these, Q1 numbers? Well,
earlier in the year, when we released our outlook for the year, which we titled "A Mix of Boom and Gloom," we knew a lot of things are going to be happening this year to shape the dynamics. Although one of the things we didn't saw coming that actually has happened is the Ukraine-Russia tension or war, which is affecting and disrupting global supply chain. But by and large, we believe that if every policy is well put in place, if the CBN and the federal government marshal their policy appropriately, the economy should be able to deliver a modest 2.9% GDP this year, which will be quite, very close to the 3% recorded last year. Okay. So by and large, we feel that outlook is still not so gloomy, but again, we need to do our home part of it.
Not so gloomy.
Yeah, to deliver good growth numbers.
All right, Dabilere Ashimi, we'll have to leave it there now. Senior Analyst, AfriInvest Research, thank you for giving us your perspective on these numbers.
Thanks for having me.
All right, so after the break, Commodities Market Update is next. Do stay with us. This is Business Morning. All right, for Commodities Market Update, we have Longi Defoe, analyst at Financial Derivatives Company, joining us on the program. Good morning, Longi. Great to have you.
Good morning. Thank you. Thank you.
Yeah, so it's a countdown.
Yes.
It's decision day today for the MPC. It's the third time, in 2022, and I'd like to know what's the word on the street.
Yeah, so for the...
Hawkish or dovish?
I mean, right now, it's a mixed bag, to be honest with you. Right. So for the longest time, we have analysts all over have been expecting a 50 base points hike at today's meeting. But then there's been a combination of different things. So as we know, inflation recently came out, it went up, and then GDP just came out yesterday, and we saw that it slowed.
Up.
Yeah, no. I mean, yeah, it's up year on year, but then it slowed from 3.98 to about 3.11 from Q4 to Q1 this year. So, I mean, that sort of gives the MPC a bit of wiggle room to say, okay, hold on, we want to hold rates. So it's going to be sort of a battle between the hawks and the doves, to be honest with you.
A big battle, I must say. So if it was a good performance, from Q4, then a better performance in Q1, how would you think that would have shaped today's decision?
Definitely, it would have allowed the MPC to say, okay, economic trajectory is moving, it's on the up. I mean, it is on the up right now, but economic trajectory is even more on the up. So yeah, I believe we can take some time to try and correct the imbalances that we're seeing with inflation and then the negative effects that that's having. But now that, of course, we've seen a bit of a slowdown, it will definitely affect the decision today.
And obviously there's this debate, about, rates, versus inflation. Is it the way to go to really tame inflation? But looking at Nigeria's, peculiar situation here, is a rate hike really the answer to Nigeria's rising inflation rate?
It is an answer, but it is not the only answer. So I do believe Nigeria's inflation has mainly been on the cost push. So prices are rising, and that's what is really pushing up inflation. And why are prices rising? We know what's happening globally. Commodity prices are on the tier globally. Oil is up, wheat is up, key commodities and so on are up. So it's really affecting things. And also, apart from just the price factors that we're seeing, the GDP and inflation, another factor that might really play in would most likely be political expediencies, because we know we're rapidly approaching election season. So that might play into some of the MPC's decision making.
Yes, and being a pre-election year, how is that playing into what we're seeing in the economy right now, talking about inflation and what's happening in the Forex market?
Forex market. It is very much affecting the Forex market, more so than almost any other part. As you know, the Naira is now at about 610. And yeah, political spending especially.
That's a market we don't like to talk about.
Exactly. It's a market we really don't like to talk about, but then we don't have a choice. So political spending is up significantly, and this is only going to increase further as we approach 2023. And yeah, it's really causing scarcity in the dollar market, and of course this is affecting the Forex rates. Yeah.
And I'm wondering, what is the solution here to this parallel market? We're seeing, the Naira actually weaken more and more, and there's still a lot to go, in 2022. So I'm wondering, how low is it going to go?
I mean, at this point, it is anybody's guess. So fear and panic are also playing a big role in it. So there are these things called as psychological barriers. So 600 was a very big psychological barrier. So now that we've crossed that 600 barrier, it really it really puts things into perspective. It really says that, okay, there's it puts things into individuals' mind. Okay, if the Naira can cross 600, I have no idea where it's going to go. So, okay, let me try and hedge against future issues right now. 610 is also another psychological barrier, which is where we're currently at now. So once it crosses 610, it's really anybody's guess. It could be a runaway for all we know.
Because there's been some chatter, about 1,000, which is quite scary. And, I'm wondering how will all of this, impact, the commodities market, the wage, wage rate. What kind of impact can we expect from this? So
it definitely does has its negative effects, but then it's not all necessarily bad. So the thing about a weaker currency is that it promotes more exports. So foreign investors.
That?
That's another concern, exactly. I mean, so foreign investors are more likely to want to come into a country with a cheaper currency because it's cheaper for them. They can try and make more money off it. But then, of course, it comes back to what you said about, okay, are we meeting our exports? Are we able to produce at enough scale to fully take advantage of this? So that is definitely an issue.
Yeah, and we've seen, take Russia, for instance. Now, we've seen how, sanctions, have been leveled against Russia, financial sanctions. And we saw how the ruble actually weakened, but now it's strengthening again. Yeah. So I'm wondering, what can we learn from Russia to strengthen the Naira?
I mean, there is a lot to learn from Russia, and I think it really harkens to Russia's economic strength, really. The fact that they've been able to build up such a dependence on their products within the EU and so you effectively have Russia bullying the people that are trying to bully them, saying that, oh, okay, you must pay for our stuff in the ruble, you must take the ruble. So it is actually affecting the dollar's dominance as the de facto powerhouse when it comes to global trade. So yeah, that is definitely something that we can try and pick up from Russia. Build up our exports, try and build up our own dependence and the dependence of other nations on us.
Yeah, well. we need that dependence because we're seeing how that's playing out, for Russia at this point. But now let's look at the oil prices. We see Brent is down.
Yes.
This morning. What's pushing sentiment in that market today?
So what has mainly weighed on Brent in the past few days has been concerns about a recession. So at the current ongoing World Economic Forum at Davos, there has been chatters of a recession it's not out of the picture. So a recession is indeed possible. And why is this? We've seen inflation on the rise, eroding consumer purchasing power. We're seeing central banks trying to fight and rein in this inflation. How are they doing this? They are raising rates. When they raise rates, of course, borrowing costs go up. Businesses find it harder to raise credit, raise finances, and of course it affects business activity, affects employment opportunities, and of course the economy slows down. So that is really what is factoring into the recession concerns. And then other than issues about recession, we also have China. China, the world's largest importer of oil. So what's happening in China? Of course, the lockdown measures, COVID-19, I believe they recorded about 99 cases or so yesterday, up from about 61 the day before. So concerns about COVID-19 lockdowns in China, and of course, waning demand in China, the world's largest oil demander, is of course weighing on the oil prices. But then, of course, we also need to think about, it's not just the demand side. So we also have the issues in supply and on the supply side, and this is also likely to continue to prop up prices. I think we're rapidly approaching a U.S. Summer driving season. Right. So that is when more drivers hit the road in the U.S. U.S. is also a major oil user. Of course, when more drivers hit the road, there'll be more demand and so on. So that should help to prop up prices and, of course, the supply issues that we've been seeing.
Right. And we don't want higher prices for oil, really, because we're seeing how that's stoking, energy costs. But looking at this battle, this global battle, against inflation, at this point, as this war, prolongs, can this battle against inflation be won? Because we're seeing them trying to raise rates, be more aggressive. Yeah. But can it be won with this war still on?
It's not an impossibility, but then the road to that will be it will be a very difficult road to tread, because of course Russia, Ukraine, they account for a major part of some of the world's largest commodities. But then it's not all bleak, because we do know that a lot of the flows that used to go from Russia to the EU are now being redirected to places like China and India. And when these flows are redirected, other oil producers will more than likely redirect their flows to the EU, which is what we are currently seeing happening right now. So it is certainly a possibility that we could win the war, although it would be very hard to get to that point.
Looks like a really hard battle, I must
very hard battle,
confess. Yeah. All right, what's happening in the domestic commodities market? How's that looking?
Well, domestic, I think one of the major things right now is cocoa. So I believe cocoa harvests in Ivory Coast are projected to go up. And why is this? Because rainfalls have started, so we're currently entering the rainy season. I'm sure a lot of people, especially in Lagos, have experienced the large amount of rain that has been going on. Yeah, this is also happening in Ivory Coast. So the year did start out dry, and this had really raised concerns for cocoa harvest and then cocoa supply going on. But now that we're really seeing rain start to return, and of course moisture build up in the soil, it's really propping up cocoa harvests, both in Ivory Coast and also in Nigeria as well. Yeah.
Quite interesting. All right, Longi, we'll have to leave it there. Thank you so much for always bringing your analysis. Longi is an analyst at Financial Derivatives Company. Thank you for coming on.
Thank you for having me. Yeah.
All right, so we'll take a moment now. All right, now let's take a look at the markets. Now we have Aniete standing by right there. Aniete, the first trading day, it's a pullback. What are you seeing?
Good morning, Ladi. I'd always refer to myself that I have my own personal crystal ball for the market.
Oh, yes.
Of course, you know, sometimes you might give your own view of the market, and then it goes in line and then maybe out of line. But just like what we expected the market to continue in that profit-taking at the start of the week, which was yesterday. So yesterday we had a 0.13% pullback, which translates to about 37 billion naira in value. So let me give you a broader picture right on the screen here. This is how the market turned out at the close of Monday's trading session, and this came largely on the back of 24 equities, which fell. They recorded losses in their share price, particularly the shares of Presco. It went down by 10%. But when you take a look at the value was actually, the loss in the value was mostly attributed to a loss by Lafarge Africa, which is one of the among the top 10 most capitalized equities on the NGX. So that's the reason why you saw this 0.13% pullback on market, and that's just when we were talking about the market rising. It had hit the 53,000 level, but then it had receded.
Comes back to what you said about, okay, are we meeting our exports? Are we able to produce at enough scale to fully take advantage of this? So that is definitely an issue.
Yeah, and we've seen, take Russia, for instance. Now we've seen how, sanctions, have been leveled against Russia, financial sanctions, and we saw how the ruble actually weakened, but now it's strengthening again. Yeah. So I'm wondering, what can we learn from Russia to strengthen the Naira?
I mean, there is a lot to learn from Russia, and I think it really harkens to Russia's economic strength, really. The fact that they've been able to build up such a dependence on their products within the EU and so you effectively have Russia bullying the people that are trying to bully them, saying that, oh, okay, you must pay for our stuff in the ruble, you must take the ruble. So it is actually affecting the dollar's dominance as the de facto powerhouse when it comes to global trade. So yeah, that is definitely something that we can try and pick up from Russia. Build up our exports, try and build up our own dependence and the dependence of other nations on us.
Yeah, well. we need that dependence, because we're seeing how that's playing out, for Russia at this point. But now let's look at the oil prices. We see Brent is down.
Yes.
This morning. What's pushing sentiment in that market today?
So what has mainly weighed on Brent in the past few days has been concerns about a recession. So at the current ongoing World Economic Forum at Davos, there has been chatters of a recession is not out of the picture. So a recession is indeed possible. And why is this? We've seen inflation on the rise, eroding consumer purchasing power. We're seeing central banks trying to fight and rein in this inflation. How are they doing this? They are raising rates. When they raise rates, of course, borrowing costs go up. Businesses find it harder to raise credit, raise finances, and of course it affects business activity, affects employment opportunities, and of course the economy slows down. So that is really what is factoring into the recession concerns. And then other than issues about recession, we also have China. China, the world's largest importer of oil. So what's happening in China? Of course, the lockdown measures, COVID-19, I believe they recorded about 99 cases or so yesterday, up from about 61 the day before. So concerns about COVID-19 lockdowns in China, and of course, waning demand in China, the world's largest oil demander, is of course weighing on the oil prices. But then, of course, we also need to think about, it's not just the demand side. So we also have the issues in supply and on the supply side, and this is also likely to continue to prop up prices. So I think we're rapidly approaching a U.S. Summer driving season. Right. So that is when more drivers hit the road in the U.S. U.S. is also a major oil user. Of course, when more drivers hit the road, there'll be more demand and so on. So that should help to prop up prices, and of course the supply issues that we've been seeing. Right, and
we don't want higher prices for oil, really, because we're seeing how that's stoking, energy costs. But looking at this battle, this global battle, against inflation, at this point, as this war, prolongs, can this battle against inflation be won? Because we're seeing them trying to raise rates, be more aggressive. Yeah. But can it be won with this war still on?
It's not an impossibility, but then the road to that will be it will be a very difficult road to tread, because of course Russia, Ukraine, they account for a major part of some of the world's largest commodities. But then it's not all bleak, because we do know that a lot of the flows that used to go from Russia to the EU are now being redirected to places like China and India. And when these flows are redirected, other oil producers will more than likely redirect their flows to the EU, which is what we are currently seeing happening right now. So it is certainly a possibility that we could win the war, although it would be very hard to get to that point.
Looks like a really hard battle, I must confess. Yeah. All right, what's happening in the domestic commodities market? How's that looking?
Well, domestic, I think one of the major things right now is cocoa. So I believe cocoa harvests in Ivory Coast are projected to go up. And why is this? Because rainfalls have started, so we're currently entering the rainy season. I'm sure a lot of people, especially in Lagos, have experienced the large amount of rain that has been going on. Yeah, this is also happening in Ivory Coast. So the year did start out dry, and this had really raised concerns for cocoa harvest and then cocoa supply going on. But now that we're really seeing rain start to return, and of course moisture build up in the soil, it's really propping up cocoa harvests, both in Ivory Coast and also in Nigeria as well. Yeah.
Quite interesting. All right, Longi, we'll have to leave it there. Thank you so much for always bringing your analysis. Longi is an analyst at Financial Derivatives Company. Thank you for coming on.
Thank you for having me. Yeah.
All right, so we'll take a moment now. All right, now let's take a look at the markets. Now we have Aniete standing by right there. Aniete, the first trading day, it's a pullback. What are you seeing?
Good morning, Ladi. I'd always refer to myself that I have my own personal crystal ball for the market.
Oh, yes.
Of course, sometimes you might give your own view of the market, and then it goes in line and then maybe out of line. But just like what we expected the market to continue in that profit-taking at the start of the week, which was yesterday. So yesterday we had a 0.13% pullback, which translates to about 37 billion naira in value. So let me give you a broader picture right on the screen here. This is how the market turned out at the close of Monday's trading session, and this came largely on the back of 24 equities which fell. They recorded losses in their share price, particularly the shares of Presco. It went down by 10%. But when you take a look at the value was actually, the loss in the value was mostly attributed to a loss by Lafarge Africa, which is one of the among the top 10 most capitalized equities on the NGX. So that's the reason why you saw this 0.13% pullback on market, and that's just when we were talking about the market rising. It had hit the 53,000 level, but then it had receded. But so far for the month, we're still up at about 6.6%, and then for the year, we're still up 23.9%. And I also need to mention that Nigeria's stock market is number 3 in terms of the best performer around the world, and then number 1 for Africa. So it's not too bad. It's just a matter of profit taking, which we will have our analysts to talk more about that market. Now, flipping over to the other side of the that's the sectoral performance, we saw it was kind of a mixed picture there. Green is what 3 out of the 5 key counters of the market turned out. Banking was up 0.1%. Consumer goods, there we have it, 0.05%, and oil and gas 0.28%. While the industrial goods, like I mentioned, Lafarge Africa was the major reason why this counter was down by 0.09%, while insurance, the bellwether components there, where they led to this downturn. Now, in terms of the for the activity, activity was down by 39.68%. Value was up by 10.15%, while deals was up by 2.97%. So, but now to give us more perspective on the market, especially as trading gets in session, let's talk to Afolabi Benro, a stockbroker, an equity trader at Stanbic IBTC Stockbrokers. Thank you for joining us, Afolabi.
Good morning, Anita. Thank you for having me.
Yeah, I'm sure you're quite aware of this, the popular market adage that says, sell in May and go away. Yeah, but at the moment, the market is still in positive, but we've seen some pullback. So what can we really attribute to this? Is it that popular adage coming into the market?
Yes, thank you for that question. So it's basically like you had said earlier in the show, it's profit taking that we're seeing across the board. Over the past couple of weeks, the market had been rallying, especially in the consumer names on the back of the results that were released. Investors were excited. And the market started to go up. However, it's not unexpected that we're starting to see profit taking come in to the market, and people are trying to book profits from our own engagements. We have seen people that want to just book profits and then look to come back into the market to take positions once again.
Okay, just yesterday, Okomo Oil had released its first quarter results. As of yesterday, the price was unchanged. Now, can you bring us up to speed with how that's, you know, when we talk about palm oil on the international market is on the rise. So how is the share price of Okomo Oil performing at the moment?
So the market just opened a few moments ago. So right now it's still quite flat. We haven't really seen any transactions going on in Okomo at the moment. You also remember that for the price to change for a particular stock, we need 100,000 to trade as a single clip. And Okomo is not a very liquid stock, so I'm not expecting to see any significant changes in today's trading for Okomo.
Okay, so now before I let you go, I just want to give us just in one word, what is your expectation for the market at the close of today's trading session? Do we expect the bull to make a comeback, or is it still going to continue in the profit taking?
I think it's still early days. I think there's still some profits to be booked by traders and investors. We do, however, expect to see that investors will start taking positions again as the market comes lower.
Okay, so let's wrap it up there. So thank you for that analysis, Afolabi. So that was Afolabi Benro. Yep, thank you. So that was Afolabi Benro, equity trader at Stanbic IBTC Stockbrokers. So now flipping over to another segment of the market, which is the fixed income market. We had, well, it was mixed for the bonds segment of that market, but mostly bullish, as you can see here. Total number of deals carried out at the close of Monday's trading session was 6, and then it was almost all of them had equal amount of deals across the 4 of them here. Then moving over to the open market operations, there was no activity for the treasury bills market. The average yield there remained unchanged. The average yield there, it was still unchanged at about 4%. But when you look at the OMO segments of that market, the highest number of deals were on the 12th of July, as well as the 13th of December. For the central bank special bills, this is the only activity carried out was on the 3rd of October, which had 2 deals valued at 1 billion naira. So, Ladi, that's it for the market. Tomorrow, I think we'll do X-ray on the unlisted securities market, which is having it's hit a new threshold.
Right. So, yeah, you talked about sell in May and go away. Maybe my strategy will be others can sell in May, I buy cheap in May, and maybe go away for a long time and make some profit.
Well, that should be you, but
right.
you should. Caution is always also what you need to put on the side of your pocket so that you don't lose all
exactly.
in terms of...
so many strategies, Anyete.
Yeah. Yes.
All right, thank you so much, Anyete. Well, after the break, we head to London. Do stay with us. All right, now heading to London. Now we have Juliana standing by right there. Great to have you, Juliana. So the governor of the Bank of England has hit back at critics who accuse him of being asleep on the wheel while inflation soared. The cost of living crisis hit UK's living standards. Seems some blame game going on right there.
Good morning, Laddie. I definitely think there's blame game going on, but no surprises because Andrew Bailey is the most powerful unelected individual in Britain. And unfortunately for him, his portfolio is very, very busy at the moment because, of course, we can't get away from the cost of living. And I think particularly the Conservative government and the Treasury, the Chancellor Rishi Sunak, they've been a little bit uneasy about some of Andrew Bailey's recent media comments. Most notably, of course, was when the Monetary Policy Committee raised rates again a couple of weeks ago. And in the press release afterwards, he used the term apocalyptic, which is a really frightening phase, especially for families that are struggling already. And he said the worst is yet to come. So I think that's what really set off the first barrage of criticism. But most notably was the criticism laid upon him by Lord King. Lord King was the central bank governor in Britain for about 10 years. And he did say that he felt not just Andrew Bailey, but other central bank governors across the world were a little asleep at the wheel, that because of quantitative easing, which is, of course, the printing of billions of dollars and pounds, demand went up and there was just not enough supply. So perhaps rather than raising interest rates for the first time from 0.1% in December, Andrew Bailey should have done it sooner. So the central bank governor, the Bank of England governor, Andrew Bailey, was speaking at an audience of the central bank in Austria. He was asked about it and he said he doesn't agree with that, that of course there are so many different scenarios that have been taking place, situations, obviously the war in Ukraine, that have made matters a lot worse. And it was important that central bankers were able to not act too swiftly in trying to keep the economy afloat. But yes, Andrew Bailey's tenure has also been rattled with scandal, most notably at his time as the chair of the FCA, the Financial Conduct Authority. Lots of issues went on when he was the head there. So there are so many issues, but of course it is the blame game. Nobody wants to take full responsibility of what's happening in the economy, and there are so many mitigating factors, aren't there?
Quite interesting. A tough time for, central bankers globally. And back here in Nigeria, we're going to be having, the MPC actually decide, on rates. But we'll be covering that right here by 11 a.m. right after business morning, because it's been, shifted back, this time. So all eyes on central bankers and the Nigerian Central Bank. But Juliana, beer drinkers could soon find it difficult to buy their favorite bottled beverage because of a shortage of glassware. Quite interesting.
It is quite interesting, actually. This is a report or a statement that's been released by Dunn's Food and Drinks, and it's a similar statement that we heard from German brewers, who are saying that, yes, it's really costing a lot of money to produce this glassware. And this isn't the glass that you pour the drink in. This is the bottle that beer, if that's your fancy, comes in. Apparently, it's costing up to 80% higher to produce than it was this time last year. And because of that, of course, small businesses are running away from using them. So they're starting to use cans. I don't know, because I don't drink beer, whether or not this is not going to appeal to customers. But of course, as we know, as we've been discussing extensively, Laddie, the cost of living, high inflation, supply chain issues are affecting all aspects of business, but particularly small businesses who are on the brink because of the situation that the global economy has found itself in.
Right, the squeeze continues. Thank you so much, Juliana. Always great to talk to you.
You too, thank you.
And don't forget to join us again by 11 a.m. We're going to be crossing live for the MPC decision day today, right here on Business Morning, on Channels Television. We're not going to be taking news track as usual. Just after Business Morning, we'll be going straight to the MPC to get the decision. Then political paradigm will follow subsequently. All right, now let's take a look at other markets. We see the fear greed index there about 12 points over 100. Still extreme fear in that market, and most markets. You see the price of Bitcoin attempted a fresh increase from the $28,500 point. It was a new support there, and there was a clear move above 30,000. We look at the price of Bitcoin this morning, $29,370. It was above 30K, but we're seeing that. We saw that pullback last night. It's down about 3.41%. Total market cap there, 1.26 trillion. That's down about 2.50%. Than the volume traded in the total crypto space. Bitcoin plus the altcoins at $82.98 billion. And we see Bitcoin dominance 44%. Price of Bitcoin 29,370 at 8 a.m. this morning. And we see Ethereum there trading at $1,985, up 2.93%. Volume traded in Ethereum, $15.94 billion. Top alts by market cap, we see it's mostly negative on that counter. Just BNB there, holding up marginally by 0.89%. Cardano, 52 cents, that's down 4.13%. And eCash, they're having a pullback, down about 2.48. And XRP, 40 cents. XRP losing that support there, trading at 40 cents this morning. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Good morning. Hello, Rume. Rume.
Good morning, Laddie. Good morning.
Yeah.
Good morning.
Yeah, quite a pause there. Great to have you, Rume. I thought I lost you there. Rume, quite an interesting price action, we're having this morning. We're seeing Bitcoin pulling back about 3%. It was looking good yesterday, but now we're seeing this pullback. What's driving sentiment there now?
Wow, the whole market is it's not having a bearing at some point, but still, I think still, a lot is going on. Yesterday we saw some movement. You see, there's a heavy correlation with the market, the general global financial market. The brief relief you asked me was more like the good news bits from China. President Joe Biden said that he's going to be considering giving some level of relief from the tariff sanction by Donald Trump. So the market was a bit excited to that, but let's not forget that the market is actually down from the financial perspective. Tech stocks are down everywhere, and this market is going that way. That is why we saw that a short push yesterday.
Quite interesting. And I remember when Coinbase listed on NASDAQ, it had gone from the mostly hotly anticipated debut to one of the most spectacular crashes we're seeing right now. What happened with Coinbase?
Wow, the issue of Coinbase, a lot of people will ascribe Coinbase issue to the fact that the market has dumped from all-time high ATH, which was formerly $69,000 for a Bitcoin, to now that it's about 28, 29, 30, that zone. People will ascribe, but the truth is that there's some sort of mismanagement in that. Coinbase has actually has nosedived some huge amount of money since April, $51 billion. It's not a small money. It's about 80% from its all-time high. And if you look very well, you'll find out that they announced, they made a very huge announcement for their NFT marketplace, non-fungible token marketplace, and it took them a whole about 3 months for that to come into reality, and a lot of persons were so surprised. And that is unlike Coinbase, and their revenue projection for 3 months have actually also dropped significantly. I know Brian Armstrong is going to come up with a strategy on that, but I think one of the things going on is more like a mismanagement. Coinbase have actually hired a lot of persons that actually working for them, about 4,000 staff. That's not a joke. And it has been projected that they're going to lose about $1.4 billion by the end of this year by Bloomberg. So it's a messy situation. I just hope they come out from this and investors will look at Coinbase and say, okay, let me just try and put my money at some point to see the best that will come out of it.
Right, and looking at Coinbase right now, would you say it's a buy the dip kind of arrangement, or just leave it?
If I wouldn't want to get close to Coinbase now. I would prefer to get my Bitcoin. Right. I would prefer to get Bitcoin and get Coinbase.
Okay. All right, Rume. Always great to talk to you. Thank you so much, Rume.
Thank you very much, lad. It's my pleasure.
All right, now, so we see the top 5 gainers there. We see Bitcoin Gold topping that count as up about 17.61%. And the losers counter, we see UST, the stable coin that's supposed to be at $1, topping that counter at 6 cents, down 13.59%. Quite an incredible time in the crypto market, with stable coins being unstable. We see Kava there down 7.94%, Zcash down about 7.93%, and Internet Computer also, ICP, that one's been on the downtrend for the longest time, trading at $7.84 this morning, down 7.23%. So it's quite a red market we're seeing, you know, in the crypto space. Even though we saw, you know, the Nasdaq actually pulled up yesterday, but we're seeing the crypto market still going down. But don't forget. The MPC decision day is the 3rd meeting in 2022. Some are expecting a rate hike. Some say it's going to be dovish. We find that out right after business morning at 11 a.m. We'll be crossing over to the MPC to get the decision, you know, for this month. Don't forget, we're not going to be doing news track right after as we normally do, because we've seen the changes there with the CBN decision day. Don't forget to join us 11 a.m. right after this program. And that's it on Business Morning. Thank you for watching. I'm Ladi Williams. Bye for now.